What's going on, Credit Snipers? This is your boy Carlos Estrada Vega with Credit Assassins. Guys, I'm excited that you guys are here today. I appreciate every day coming along with me in this journey and all the research that we do and all the topics that you guys are bringing us in order for me to go ahead and regurgitate to you guys and bring more value in order to help you. So I know you guys have a lot of questions, and it's my goal and my mission to make sure that I find those answers for you guys. But guys, today I'm going to talk to you about four ways that you may have to fund your new business. A lot of us wants to go in business nowadays. We cannot wait, or we can really trust corporate America and all these other companies to go ahead and support us for the rest of our life. That's no way. I know that we have developed this mindset of entrepreneurship, and I applaud you for that. And if you're here today, it's because you want to know how to start getting funding, how to actually start scaling your business, and to be able to achieve that vision that you have for you and your family, hopefully for the business as well. So guys, but before I continue, I want to make sure that you guys go ahead and subscribe to the channel. Make sure that you click on that bell icon. Make sure that you click on all so that you'll be notified every time that I post a new content. But at the same time, guys, give me the thumbs up. That's definitely going to help me with the algorithm in order for me to bring this value, this content to many more people, because just like you are benefiting from this today, I would love for many more to benefit from it. Hey, shout out to Jacob Smith. It's Jason Smith. But this guy's Jacob Smith. But yeah, shout out to him because he's the one that brought that to me. He's studying new business. He wanted to find out different ways to fund the business or to start the business. He has a business startup. So I want to give you different ways that you may have in order for you to not only fund your startup, but at the same time scale if you have an existing business. All right, so do you know that you can get financing if you have 6 months of consistent cash flow in the business? So if you already started a business, and I know many of us have started a business from our pocket, from bootstrap, from our savings, and that's not really a way to actually start a business. But let's say that you're already there, because unfortunately, really, a lot of us went into business, and even me, before I started this whole best credit blueprint and credit assassin movement, learning about credit, I did that, and I started from my own savings, my own money, and I was even funding my business from my personal credit, which is a no-no. I preach to you guys not to do so, but let's just say you are here because that's what we're talking about. You already have an existing business, so there are a lot of ways in which you could start getting funding by the past 6 months of consistent cash flow. So some of these options that you have will be a cash flow financing. Many banks will give you, or many lenders will give you lending upon the cash flow that you can show that you've been getting in or that you've been having from the business. Not only that, a lot of merchants will give you credit because they see the amount of money that you are able to bring in, and they determine how much you are able to pay them back depending on how much you are bringing in. Now, another thing is, like, a bank will take your cash flow for the past 6 months and use that as the basis to give you a credit line going forward. So you may have an open credit line in order for you to be able to fund or scale your business. Now, PayPal, Square, and Stripe can give you credit lines depending on your cash flow. They could give you credit lines that you could purchase. You could use that to purchase with vendors that can accept PayPal, Square, or Stripe, and depending and based on your past cash flow for the past 6 months. Now, something you got to keep in mind is it's amazing that this type of financing, you are able to get them between 72 hours or less, which a lot of the times, if you find yourself in a bind and you need to make a move for the business in order to hold the business, to keep the business afloat, that could help you. Now, in the long run, this type of financing is going to be a little more expensive. So what I advise you to do, if you need to and you are able to get it, use it, but also try to look for other avenues. Why? Because eventually, yes, you may be able to pay that off, but it's gonna cost you a lot, and it's gonna eat a lot on your revenue and on your net profits that you'll have from the business. Now, besides that, this type of lending will be unsecured, so which means that you have to put no collateral for this type of lending. Now let's talk about collateral. So collateral based lending. So when we talk about collateral, we're talking about you putting something up front or in lieu of that lending. Now, one thing that you could use as collateral is stocks and bonds. Stocks and bonds could be used and be pledged for you to be able to be lent on. And one of the main things is that you could use these stocks and bonds to get lending or interest rate as low as 5%. Now, the good thing with the stocks and bonds is that you don't have to give it to the bank, but you can pledge them as a collateral, but you can still use to make sure that you invest or you're doing the stocks and the bonds and do any other type of investment, thus making more money on the side until you paid everything off. Another collateral based financing is your 401k or IRA. Now, you could use this as a collateral. You could pledge this to even get 100% financing on a lot of your lending. Now, this also comes with a price, very low price, which will be between 3 to 5% most of the time. Now, you also have the consumer-based financing or your credit hybrid. Now, I'm gonna give you the good and the bad about this. I'm not too fond of it because I seen very predatory type of lending when it comes down to this. And I seen it specifically with a lot of companies that do help you get this type of financing. They first tell you that it's going to be a soft pull. So what they do, they go out and they use either your Credit Karma or your Experian, and they pre-qualify you. But what they don't tell you is once they have your credit, they're gonna go out there and use the car salesman type of mentality in which they're gonna go out and shop you around with every lender available that they have in their pool. So what happens every time that they shop you with every lender, more than likely they will get you approved. But every time you are going to inquire an inquiry, I've seen most of the times that clients get between 8 to 15 inquiries, and 8 to 15 inquiries is something that is definitely take a toll on your credit. Think about this. Every time that you get approved for a car and you get approved, I mean, let's say you get an inquiry and you get approved, you may get between 1 to 3 points off your credit report. But every time that you get this approved, you may get between 4 to 7 points. So let's just say you get approved on 10 of those. 2 points, that'll be 20 points that are taken out right away. And you get this approved. Let's just say 4 points on the low end. Let's just say at least 5 of those. That's also 20 points. So let's just say that you got a combination of both. 40 points is a big toll. And they don't tell you how to use that later on. Because what happens is when they use or when they get this lending or this hybrid lending, these credit cards, and they have a pool of 5-6 credit cards equal to, let's just say $60,000. Most people that have come to this type of lending is because they need $60,000 to invest into the business. So what happened is once they use the $60,000 that they were able to get, they are using 100% of the utilization right there, which is also going to take a big toll on your credit report, on your credit score. So let's just say they already lost between 20 to 40 points on the inquiries. And by the utilization, they may lose between another 50 to 100 points. So we're talking about, I've seen people going from the 800 to the mid 650s. So I urge you to be careful how you use this. Yes, it is lucrative as long as you know how to use credit, you know how to read credit, you know your credit score, and you also make sure that you are upfront with whoever is helping you with this hyper credit financing, and make sure that they are clear with you how many lenders they are going to shop you around and what type of lending criteria they're going to use. So make sure you speak that language, make sure that they are clear with you, and don't accept no BS. Now, some of the things about this is that, and I'm gonna read it from my list. I didn't want to miss this. Is you have no back finances. You don't have to prove any documentation. You don't have to prove any bank statements, no tax returns, no cash flow requirements, no collateral needed, and most of the times you get 0% for almost 18 months. So which is good, which is usually you're gonna get with a good credit card or a tier 1 credit card introductory rate. So that's the good and the bad. Now, I advise you to make sure you do your homework. Whatever state that you are in, please, I urge you, learn about credit. Learn how to read your credit. Know where your credit score is at. And make sure that if you must, never go over 30% utilization. Now, another consumer-based type of credit, which is business and personal, because most of the time you are going to be the personal guarantor for the type of business, is start creating your business credit. So you guys heard me in a lot of my videos in the past in which I preach to you. Now, once you get a business, hey, the first thing you need to start doing is creating that baseline, that foundation. How do you do that? You get those net 30s, those accounts or vendor accounts that are going to help you create that foundation in order for you to then graduate and get the gas cards, which is the 2 gas cards that I urge you to get, and then start applying for business credit. So in this case, I'm urging you to get 5. Some of the most common ones that I tell you to use is Quill, Uline. I used to tell you Granger until I did another video. The Granger is no longer a good net 30 for you to use, because after I spoke to headquarters, they specifically told me that, hey, we are no longer wanting to be used as a net 30, so we're not going to be reporting to the credit agencies. Plus, they made an internal policy not to even tell you or give you any information about who, how, when, and why they not report. So really, there's no point. There's so many other companies out there that I advise you to use. My advice to use, don't use Granger, but it's up to you if you guys want to. Now, I tell you to use Quill, Uline, Home Depot, Staples, Jersey. That's at least 5 of those. And if you want to know more about those net 30s and vendors, then go to actually have one of the videos that tells you about how to create business credit from the ground up. Once your business is established, one of the things that I'm going to advise you to do is go to nav.com, nav.com. Now, nav.com allows you to check your credit, your business credit. And this is the best way for you to check your business. It's not only reports from Experian to Equifax and your Dun & Bradstreet, but Nav has 3 types of memberships: the basic one, the middle one, and the higher one. So between the middle one and the higher one, the middle one is a Tradeline that reports to your credit score or to your credit report, to your business credit report. So I'll advise you to get that one. Now, the highest one will allow you to, it just give you an extra score. That is the score that you would need if you are looking to apply for SBA loans. Other than that, don't use it. The middle one, I think, is $39.99, and the highest membership that they have is $49.99. But any of these top 2 will allow you and will report as a Tradeline. So like that also allows you to create business credit. Now guys, this was 4 ways plus some and bonuses on how to actually start creating business credit or get funding for your new business. Guys, I appreciate that you guys were here today. If this was your first time on our channel, make sure that you subscribe, click on that bell icon, give me the thumbs up, so like that you'll help me with the algorithm. Now, if you know any other ways that could help our community of how to fund or how to get business funded, hey, let us know. If there's anything on this video that you have a question about, go ahead and put it in the comment. Anything that you want us to update or any topics that you want me to touch on and do research on, hey, please let me know. I appreciate your time. Thank you for being here today. My name is Carlos Estrada Vega. I am the Credit Assassin, and I'll see you in the next video.